From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 23rd, 2015. I'm going to get the week started on the GBPUSD, the Greater British Pound, versus the US dollar. First off, taking a look at the news calendar today, it's very light news scheduled for the day today, so nothing really to concern ourselves with there. But as we go through the rest of this week, there will be some news that you'll want to pay attention to and could potentially cause some volatility in the market. Today, though, we're going to take a look here on the GBPUSD, the pound dollar. Over the past several months, we're going all the way back up here to the top left-hand side of the chart, going back to July of 2014. We began a pretty long-term downtrend. I don't think that's any surprise to anybody. We started all the way up here towards the 1.7200 level, and the market fell all the way down here towards the 1.4900s. In the most recent weeks, though, since bottoming out there into January, we started to see a little bit of a rise out of the pound dollar, a little bit of a change of the trending pattern. Within the downtrend, we saw lower highs and lower lows. Even within some of these periods of congestion, we continued to see lower highs. Even in this period of congestion and this little sideways period here, continued to see lower highs and eventually lower lows in a continuation. In the most recent weeks, like I said, we've seen a change of that pattern where we've seen higher highs and higher lows, and this formed this rising wedge pattern that we can see here between the two red trend lines. That'll be easier to see here in a moment when I zoom in. But we've seen a change of the longer term trending pattern. The question, of course, is this a longer term change? Are we going to see a turn into an uptrend in a similar scenario that we've seen over the past several months where it fell for a long period of time? Are we going to see it continue to rise? Or is this just a temporary climb, a temporary retracement of this downtrend, and we look for a turn back down in the downtrend? That's a good question, because I don't believe it's been truly answered yet, because until we start to make significant, in the short term we've made rising lows and rising highs, but we haven't made significant efforts to break through some of these periods of congestion that we can see here within the long-term downtrend. We're just testing very close to those now as it comes up. The 100 period, 100-day moving average coming down here from the top, we're still underneath that, which could again imply that we're still confined within the range of the downtrend. So we're looking at this in two different ways. Yes, we'll watch for the potential continuation of the uptrend, but we're also looking at this as just a temporary rise for the pound dollar and the possibilities of turning back down in the direction of the downtrend. Let's go ahead and zoom it in a little bit here on the daily chart so we can get a closer view of this rising wedge that we've been studying here. You can see the top red trend line connecting with the highs, rising highs within the wedge. You can see the bottom red trend line connecting with the lows. And very interesting is the way you would draw it is drawing from the lowest low down here, connected to the next low before the highest high. And I think that's the important part about this. You don't want to connect it to this low right here, today's low, because that's after the high. And so if you count this as an uptrend right here, that uptrend essentially ended at the top of this blue candle, the high that tapped here into the 1.5480 level. So if that's the high, you don't want this trend line connected to a candle that's after that high. So that's the way I've drawn it here, and you can see today we are underneath that. So if this is going to be a breakout of that rising wedge pattern, we definitely want to focus our efforts in the bear side, because there's a possibility that we're seeing a break of that rising trend pattern, that rising wedge, and we could be looking for another turn back down again. Now, of course, it doesn't have to do that. It could find support and go back up, but that's definitely something that has my interest, is the fact that we have pushed underneath that rising wedge. We do see that today's Forex Black Book has gone dark green. It's still green, but it has gone dark green, so it's showing us that the shorter term trends are starting to look bearish, while the longer term trend, or over the past several weeks, has been bullish as it's been rising from the lows. We have been basically stuck, though, in a range or period of consolidation here for the pound dollar between the green shaded area, 1.5360 down to 53.26. That's the green zone. Been stuck there as support and resistance into the pink shaded area, which 1.5416 to 1.5435. That's our pink shaded area holding our resistance. So we've been bouncing around here. Last week, while we were above the trend line, we focused on buying. We were buying on dips into support, buying into the green shaded area, and made some pretty decent profit as it pushed from the green zone back up to the blue shaded area. I think that I'm going to stop doing that for the time being since we're underneath this rising wedge pattern. So for the day today, I'm going to begin even looking in the other direction, back to the bear side for the pound dollar, looking for two different opportunities here. Possible selling into the pink shaded area, which of course has been our resistance and would be back underneath the trend line of the rising wedge, or the breakout of support, which would be, at least at this point, underneath the green zone. Those would be two of the possible opportunities. Now, if you think that we still are looking for the rise here, I'm okay with that, but the best opportunity that I would look for that would be, once again, back down here to the green zone. So there's three opportunities to focus in on today, and as I said, there's very light news today, but that gives you three opportunities. Either you're buying support into the green zone, as you have been for the past several days, targeting the pink zone or the blue zone or higher. The other two opportunities, with the breakout of the wedge pattern, you're looking for sells into the pink zone or underneath the green shaded area. I have a couple of fibs back in time there. You can see the 618 fib of this range right here, and it starts where this black X is up here at the top left, right there from the black X down to the lowest low. If you take Fibonacci there, the 618 is at 53.65. That's the green shaded area. 236 of that range sits up here closer to 54.78, and that's at the bottom of the blue zone. So just that little range. Of course, that's just one range. You could take it from a little bit higher. You could take that same fib and just stretch it out like this, and you can see now you have the 50% of that range sitting at the bottom of the green, or top of the green zone, holding support around the 53.60s, and the 618 sitting down here into the blue zone. So either way you look at it, closer to the blue zone or the green zone is Fibonacci for this pair from the previous downtrend. Now let's take Fibonacci in just one more way. Let's take Fibonacci from the low all the way down here at the bottom to the current resistance high. And as we do that, that's very interesting too, because we begin to see Fibonacci here at the green shaded area. Also, 236 is at the green zone. Just underneath that would be the purple shaded area. So clearly, a breakout of the green shaded area, we look for the fall back down into the mid 5200s, back down here to this purple shaded area. We have Fibonacci lining up down there from a couple of those different trend ranges into the purple zone. So break of the green zone, we go to the purple zone or lower. Staying above the green zone, potential to rally to the pink zone or blue zone. Under the pink zone, as we've seen for the past several days, resistance. That's a kind of a look from the daily chart. One more time, let's take it down to the 4-hour chart. Just give me a moment to look at this for you. As we look at it, very interesting here. If you take all of that I just talked about, the resistance into the pink zone, the support into the green zone, the rising wedge. If I zoom it out one more time, you can see even here on the 4-hour chart, that rising wedge, we're underneath it. Like I said, there's your trend line connected with the low, low, and still after that high is all this information here. If it makes a new high, of course, we got to readjust that trend line. But here, between the pink zone, green zone, are your resistance. Selling 1.5420 into the pink zone, a possibility. Selling under 1.5325 to 30 under the green zone is a possibility. If you're looking for a buy, the green zone would be an opportunity for the consolidation between the pink and the green zone. One other thing that I might mention is potential head and shoulders pattern developing here between the left shoulder there where the black X is, the head here, and of course we would look for the development of the right shoulder on the right-hand side. Let me get a black X there on the right-hand side, possible there into the pink zone and underneath our rising wedge. So potential head and shoulders, break out of the green zone, we look for it to go lower. All that changes on a push above the pink zone. We're back to the blue zone or higher for the pound dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.